Hi, Matthew. Bo Sears here, CEO of Helix Exploration, PLC. We are a helium-focused explorer and producer with assets here in the United States.
Bo, good to see you. It's been a while, but I thought about catch up. We'll call it an end of year roundup and maybe looking forward as well. Look, I think since we last spoke, you've obviously made that acquisition of the processing plant. I mean, first, why do that?
You got to process the helium in order to extract its value, and we believe that plant is a pivotal moment in our company history, short company history, I'll say. It is a plant that was fully functional and processed very well, and we're just going to retrofit that thing and haul it up to Montana and start producing helium. So we're really excited. From a value perspective, we bought it for pennies on the dollar. So it was came in well under what we had anticipated our processing cost to be.
Right. So $500,000 doesn't sound like a very big plant, but does it do what you need it to do?
Absolutely. So the plant, the good thing about PSA, pressure swing adsorption, which is what that plant is it requires a membrane system to go on the front end of the plant in order to increase the helium throughput through the plant. And the great thing about membranes is you can just stack on more membranes as you have more gas, as you discover more gas. So when we drill more wells and start producing more helium, all we have to do is add more membranes on the front end. So from a processing standpoint, it's actually quite an easy endeavor. Not to mention the composition of our gas is quite easy. It's all nitrogen with some helium, so there's no CO2 to worry about and other nasty stuff.
Okay, and just for people listening, like we are going to get onto Rudyard and get more in a second, but just sticking with the plant for a second, $500,000, pennies on the dollar. Like, why was it so cheap? And I guess secondly, how much are you going to need to spend to kind of get it up to spec?
Yeah, so we are waiting on bids to get that refurbed. Regardless, that plant brand new would cost probably $4 million. It was a fully functional plant. It just needs to be put back together. And the reason why it exists, it was sitting on an old facility in Kansas that just went in central Kansas, in fact, and just had no need for it anymore. So it was hauled off to a yard, and we picked it up.
Okay, and right, and I need to sort of ask also a little bit about the market, right? There's a lot of euphoria and excitement, last year around helium. In fact, lots of helium companies coming out of nowhere. It seemed with varying degrees of experience with helium. That excitement seems to have gone away a bit. Do you feel that? You're sitting as a £20 million company. It's been kind of fairly flat, I would say, for you guys. Has that excitement left the market? Have investors left the market? What are they waiting for, do you reckon?
That's a very good question. I believe we are terrifically undervalued. To give you an example, let's just say we found at the very least, 300 million cubic feet of helium at Rudyard, for instance, at the very minimum of $400 an MCF. That's what, $200 million worth of helium right there. So I think there's just a disconnect between understanding what reserves are, what those reserves mean, and the value of those reserves. So, but that will come out in due time.
Well, give some broad brushstrokes there on that. You're not talking about you're talking about reserves here, right? So why is that more meaningful than a resource?
Well, so resource is speculative, right? It is a resource is what you think you might have before you start drilling a well. So even though you could have a resource report, those could very well easily be dry holes. What we have done, we have transitioned from resource to reserve, and that is extremely important because now we have deliverable helium. It's something that we can begin producing the moment we turn that plant on.
Okay, well, and explain, because it's helium, and the reason I'm asking such basic questions here is, okay, I know everyone understands conventional oil and gas and maybe even in mining context, but here it's helium is something that not a lot of people understand or know much about. So is it any different? What have you had to do to say, right, these are now reserve numbers?
You have to do a flow test. And obviously there has to be helium in the gas, and we have that. The general rule of thumb, depending on the quantity, the volume of the reserve is 0.5% helium. I guess that's kind of the magic number. Where that came from, I don't know. But we have very commercial helium at 1.1%. We don't have any methane to process out, so it's a very easy thing to process. So it's it's a very exciting endeavor, really, of what we're dealing with. It's everything has just gone swimmingly well for us over the past. We've only been public since April, and we've had some tremendous success.
Okay, okay, it's new. Like I know helium space has been around, but not a lot of players in it, and not a lot of understanding. I'm going to keep saying that because you just used the word there, commercial, right? You think you can make money from this? Again, give me the reasons why you think this is. You can use the word commercial in this conversation so early on.
Because helium is such a valuable commodity, it's always in short supply. There have been 4 or 5 shortages over the past, 2 decades, and they have been severe shortages. And when I say severe, I mean industry has been severely impacted. And so helium has been effectively a triage unit for so many years. The most important users, say GE or Siemens or some of the chip manufacturers, they generally get a lot of the helium, but they are also victims of allocation in times of shortages. When you go down the value chain down to, say, the balloon guys, those guys are the most affected by shortages. They'll have oftentimes, 80% allocated, volumes, or they'll be reduced by 80% rather. So, helium is a just-in-time inventory product. When you produce it, you got to use it, and so there's always going to be a need for helium, especially here in the United States, because we do not want to become reliant on foreign sources of helium. So those foreign sources are. Right now, they're Algeria, Qatar, and Russia. Of course, we're not going to get helium from Russia anytime soon. So we need to fill the United States market with helium. And with the passage of the CHIPS Act, that is going to require enormous volumes of helium just to feed those processing fab plants.
Right. Okay. But again, can you give me a sense of the movement in, because price is always a good indicator of scarcity. So how's the price moved over say the last 5 years, and has there been any significant change in the last year for instance?
Prices have always risen higher. They really don't decrease all that often at all. Of course, there is no posted spot price for helium. It's kind of an inside number. The market is controlled by a group of industrial gas companies for the most part. But there is a kind of whisper price out there, and that price is always rising. Has always risen since the United States federal government was in the business, and even after they have exited the business, the prices have gone up to as high as, in times of short supply, $1,000 an MCF. Right now, we're sitting at about $400 or $500 an MCF, so it's an extremely value. So an MCF is 1,000 cubic feet. That's how helium is valued.
Right, but how do we get a sense of typically what margins look like? Okay, impressive numbers, but everything's gone up. Costs have gone up as well. So have costs gone up comparable to the price increase, or are we seeing increasing margins available here for commercial production?
Anytime you have an increase in the value of helium, the helium I'm selling to an end user, for instance, that is going to add to the bottom line dramatically, because the price of producing the helium is not going to change all that dramatically. So your margins are only going to increase by the value of the helium that you sell it for.
Right. Okay. How do I get comfort as an investor? If I want to be a big investor in this, how do I get comfort around some of the market factors which are driving this? Because at the moment, it just sounds like if there's a lot of, would you say, not hearsay, whispers. I'm not going to base a big investment off the back of that. So where's the comfort come from for you in terms of getting involved with this one? You've been involved in this sector for a long time actually. But me as a new guy coming in, what do I need to know?
That's a great question. I think what you really need to know in the helium space is it is a commodity of tremendous value. And I say that because it is, without helium, we are living in the Stone Age. It is so valuable in chip manufacturing. It is valuable in MRI scanners, and the high-tech list goes on and on and on. And the interesting thing about helium is in most of those, virtually all of those applications, there is no substitute for helium. And helium, just like oil or natural gas or a lot of other commodities, it's a finite resource, so there is depletion. So at one point, we will run out unless we discover more. And the major industrial gas companies, the ones that control the helium industry right now, do not drill for helium. So we are dependent on existing resources that have been producing for quite some time. So we have to find new resources in order to fill this growing demand that is ever increasing every year. And the great example is what I mentioned previously, the CHIPS Act. We are bringing a lot of new chip manufacturing facilities to the United States, and each one of those will require enormous amounts of helium in order to produce the silicon wafers that you use every day.
So, and what do you find? Maybe you should jump to Rudyard, so just to give us an example of what the asset actually looks like. Because so you talk about like what 1.11%, but you're basically getting a variety of what do you got? What do you got? Gas? You got helium? Have you got hydrogen in there as well?
No, in no? Rudyard, and so let's just stick with Rudyard as a perfect example.
Yeah,
Rudyard is principally nitrogen and air. The air we breathe is 78% nitrogen, so it's effectively just air. So you produce the helium out of the nitrogen, and you vent the nitrogen with no adverse effect at all. And you harvest the helium and you process it and get it up to high purity gas. And then you take that gas and you fill it into tube trailers and you take it to the market, whoever that end user or third party distribution system is. From a processing standpoint, it's really easy as opposed to traditional helium processing right now, which is mostly methane, taking gas to liquid. And because helium does not liquefy at temperatures of liquid methane temperatures, it comes off the top relatively pure. So we are focused on a helium-centric, helium is a primary target system here, which is extremely valuable because we don't have any extra layers of processing.
So would you call yourself like a pure play helium company? Is that too much?
That's exactly right. Helium is very akin to mining. So think like gold mining or something like that.
Silver is the one I'm thinking of because there's a lot of silver byproduct. You talked about gas, the big gas guys producing helium and controlling the market. But there's very few pure play silver companies, and those companies obviously are doing a lot better at the moment. So for you, how do you survive if, say, the big gas guys turn up the helium production? How does that affect the market for you? How does it affect your ability to transact and do business?
That's the beautiful thing. They can't turn it up. They are operating at maximum capacity right now. And so we need a lot more helium to fill the gap that they cannot produce. It's not that simple. They can't just turn the switch and say, let's produce more helium. They are governed by the prudent flow rates of each particular well that goes through a gathering system and into a plant. So we've got to find more helium.
So basically you're saying the size of the market is known. If they're operating at maximum capacity and the extraction rate, what future gas production and helium as a result will be. You're saying there's no new helium byproduct discoveries at the moment? I mean, so there's no immediate impact on the market for helium? Is that right?
Demand will grow even more when the supply increases.
Right.
It's just, for instance, MRI manufacturing, they require lots of helium. They're trying to develop MRI machines that use less helium because they don't want to become reliant on these large helium need machines. But that industry, for example, would grow if they just had more helium. But we are pegged at the existing supply. So once we have more helium, that will fill the market. And then once we find more, that will fill it up. So it will grow. The demand will grow with supply increases.
Okay. I need to come back to this valuation component, right? So you're saying, for you, as far as you're concerned, helium will continue to grow in margin because price is moving up. But it's whispers, all right? You do have a reserve which says, okay, we've got certainty over what's in there and we can put a dollar number on it. You're saying somewhere in the region of say $200 million potentially. I would need to understand, can that reserve number grow? How much more work, how much more money do you need to spend? And do you indeed put your efforts there? Will that help people get a sense of the value of what you've got here? Because at the moment, they're not getting it.
Right. And so that's another great question. So let's just stick with the project we were just speaking of earlier. So Rudyard Field, we can drill wells there for $1.2 million a piece. drill and complete those wells, build gathering systems to increase the throughput through a plant. Ingomar is the same thing. Once we have a commercial success over there, the wells are a little more expensive there, but from the value extracted from the reserve, wherever you find it, far exceeds any of the cost required to get the gas to market. So, for instance, exploration costs are a meaningless cost when you consider the overall reserve value. And right now, with the well we just drilled at Rudyard, we have just unlocked a tremendous amount of value just by virtue of flow testing the well and using the value of helium. We know our processing cost, we know what we can sell the helium for, and we can get moving. So that's what I would like the investors to really understand, is that it all starts with the reserve. Once you have the reserve, you have something of value that you can move around the market.
Okay, but again, I'm just thinking of like the size of the market for helium. It's tiny compared to the size of the market for mining, which is tiny in comparison to all the other types of investments investors can focus on. So you've got a reserve at the moment. Are you saying, look, it makes more sense for us to focus on getting into sales of those reserves sooner rather than spending, and I know you say it's a tiny amount of money in exploration, but if you haven't got a lot of money, it's kind of relative, right? Right now, spending money on stuff which doesn't generate cash flow may not be the most sensible thing for you. Showing a route to market, one, you get the plant working, two, getting the product to market, and three, receiving revenues from that. Is that what the board is focused on?
That's what we're doing right now. It is why we bought the plant right this second. It is why we are retrofitting that plant right this second, and we will start producing our well the moment that plant is ready. And so once you start producing gas and start selling that gas, then you can start growing more organically. Use of proceeds, for instance, to expand the footprint of the field, which is quite large, much larger than we had anticipated. So it's an exciting endeavor. It's a commodity of extreme high value, and because of that value, we can use sales to help fund further exploration in this and other areas.
What's the time frame?
I would anticipate that we're going to drill at least two more wells this year in Rudyard, maybe three. We'll certainly get after the Clink well again very, very soon. So, I would say here in the next couple months, we could even have another well drilling and another reentry effort. But 2025 is going to be an extremely busy year for us. We're very, very excited. Lots to do.
Why more drilling if you've got reserve numbers like that? Why not move to revenue production? What's stopping you doing that? Why spend 2025 drilling?
Well, no, we will get the plant operating, and we'll start producing helium while we are drilling these wells. That's the beautiful thing about small scale PSA processing. It allows you to monetize the commodity as the field is being developed, and that's very, very important for people to understand. We're not stopping. We're not just drilling more wells for the sake of drilling more wells. We will actually be producing and selling helium concurrently with drilling an active drilling campaign.
Right. So I'm going to ask a specific question. How much more time do you need, and how much more money do you need to spend to get into cash flowing status?
In order to get to cash flowing status on our existing well with the existing plant, we're talking nothing more than say, a couple $1 million, because we'll need to add a membrane unit on there, and that could take some time. But
and time frame, give me a range. I know it's hard to, you're not giving guidance, but typically how long, with what you've got to do, how long typically within a range would you take to get into production and then sales?
We could be producing by this summer.
Okay.
All going well, we could be producing by midsummer, late summer at the latest. And
this year. This year is all I need.
Yeah.
This year is all I need.
Yeah,
okay.
yeah.
Okay. Well, look, Bo, that's all I kind of wanted to get to, right? Sorry to be so blunt around the commerciality of this. I just want to see how close it is, how real it is, and then if you're producing cash with some of the clues you've given us today, how much money you will have available on the balance sheet to actually do more exploration and drilling. So appreciate your time.
Absolutely.
Thank
Matthew,
you.
thank you so much. Really appreciate it.